We are 60 minutes into the session. Pretty robust jobs report. Markets up. We bottom over the last 2 days. So Thursday, Friday, we got Apple earnings. Earnings were pretty strong, right? The earnings are pretty strong. Amazon was great. Amazon exploded. And Apple kind of disappointed, right? But the price of Apple moved up pretty high. I mean, Apple's been at all-time high. So, of course, you're going to get the positioning, overweight a little. We know Apple positioning looks a little overweight. It's been just moving straight up like a rocket. So Apple pulled back, but I expect some buyers to come in. They got $160 billion of free cash flow on the side, bigger than most companies, right? They have more cash than the size of most big, large caps. So the market is moving higher. I mean, it's a good jobs report. It's not amazing for the inflation picture, but it shows that there's a recovering economy. And now the market came down, filled the gap here. See this white line? This is the gap, filled the gap, bounced. So there are buyers coming back in. We got a QQQ moving up, consolidating. It is Friday, so usually get a down day on Friday, but there's not a whole lot of fear. When you see consolidation on a Friday, then the market is still digesting. Is this too good to be true? What are the implications? We had a sharp move down and we bounced. So Qs are up. IWM small caps up. Actually made a new high of day. S&P, like we said, S&P is consolidating. Advanced decline. More stocks. 1,200 stocks moving above. Or I'm sorry, 1,200 stocks inclining or moving higher than declining. So that is market breadth for you there. And then you got the Dow. Ooh, you got the Dow down here. Dow's moving up also. So the market's sort of consolidating, but if you look at the bigger trend, we are gapping up, right? Now, keep in mind some of the risks right now, obviously, are going to be, well, let's take a look at Apple really quick. Let's take a look at Apple's price action, okay? Before we move forward. So Apple, big gap down after hours, right? Right into the support, right into support. We marked the support. What did we say about a week ago or earlier this week? We said, hey, if Apple does have a bad report, I mean, the stock is up insanely, then we're expecting a gap down or at least a pull back into that support line. So we got that support back in a 185, which was the previous all-time highs. All right, we got that retracement into the previous all-time highs, and we got a bounce there. So this is as expected, right? Let's go to Amazon. Big gap up, totally opposite. And the reason for this is because Amazon is not at all-time highs, right? The positioning in Amazon is probably a lot more underweight. And so you get the move higher because sentiment has increased for Apple. Price hasn't really moved yet, considering the mega cap tech. So we had a big gap up for Amazon. Now Amazon on off to the races. They had an amazing report also, by the way, both beating top and bottom line revenue for mega caps. I think the earnings picture is continuing to improve. This is the bottom of earnings. The economy is not slowing down, and the risks are evaporating. The downside risks are starting to evaporate. Let's jump into the jobs number. Okay, let's go into the jobs numbers here, and in general, right? Oh, we also have the Fed speaking a little bit too. We have a couple, not Jerome Powell, but we have some Fed speak. And this is sort of what we're looking like. We're still in trend here. Let's actually move this chart, start to get bigger into this chart. So going into the job numbers, right? The thing to understand here is that the unemployment rate has been at historic lows for a while. Everybody was surprised, right? The expectation is that if unemployment remains where it is, then you could get stickier inflation, but that hasn't been the case. The other part is, okay, yesterday we got private payrolls, right? Yesterday was private payrolls, and we also got ISM. We're going to go over that. But you had private payroll. Actually, that wasn't yesterday, was it? That was maybe a couple days ago. ISM prices. Hold on. Let's double check this. We're looking at this week. Anyways, private payrolls came in very strong. And what that meant is, hey, it's usually a signal that maybe the non-farm payrolls or the more the more benchmark rate for jobs would come out strong, but that wasn't the case. So we got unemployment, look at 3.5%. I mean, historically, we're at, lows, and that doesn't look to be changing anytime soon, right? There are jobs to be filled. We've seen that. The non-farm payrolls, this was the number that actually missed. This is the first time I think we've actually missed non-farm payrolls, okay? So these are the actual payrolls for most of the economy. They're still lower. We're still decelerating. So although you might hear, oh my God, jobs are so strong. Well, they're strong relative to the rate hikes. Having 5.5% rate hikes and in a slowing economy. And usually jobs go negative when you enter a recession, and we're not seeing that. We're seeing the jobs numbers maintain above the, they're still expanding, right? So they're not super hot. So this is why I say this is really good for rates, really good for the Fed, because you're not getting extreme job beats, right? We actually undershot the jobs number. The expectation was 200K, 190K. We undershot that, which is perfect. Maybe it was manipulated data, but that is actually perfect for the to put pressure on the Fed to hold the pause. Okay, average hourly earnings month on month, we've been sticky at 0.4%. That annualizes to 4.8% inflation for wages. Not great for the inflation picture, but hey, if your jobs, if you have jobs, you're still going to have your wages are still pretty elevated versus historical norms. Okay, now year over year, still sticky at 4.4. If this thing starts to turn up, this will be negative, right? If we get a turn up on this in this indicator, year on year wage, year on year average hourly earnings, which is a signal or a reflection of wage inflation, supply side inflation, then we're in trouble. But we're flat. We're flatlined. I don't see it going higher. It doesn't, it's not terrible, but it's not great either. The expectation was 4.2%, so we overshot that. The average hourly earnings was overshot. Okay, we overshot it, but we're sticking around 4.4%. Now, where's the pressure at? If we look at the economy slowing down, the pressure says this should decelerate, right? It should come back down to 4.3, maybe lower, or maybe it sticks here. Who cares, right? Who cares? As long as we get the overall inflation picture lower, which is debatable at the time. So that's it. I mean, there's not much difference. Here's a good part. You have labor participation sticking high, and this signals that people are coming into the economy. They're coming into the jobs market, which balances out the supply of labor. You get more supply of labor, prices or wage inflation can, remain unsticky. Now, looking back at kind of the leading indicators, right? This is what's holding the economy up. This is the ISM services report. See if I can zoom in here. Is it going to let me zoom in? Either way, you see we are holding above the contraction zone. So under 50, here you got 50. Beneath 50, the economy slows down, right? You're going into recession territory. So we're holding on. The economy is still up. Now, some of the stronger signals here, you got business activity, new orders, employment. Everything's pretty solid there. Prices have been trending lower for that. And, that's pretty positive. That's not the big issue. The big recessionary issue is actually the ISM. Okay, that's how you zoom in. You have to use this. The ISM PMI. So the manufacturing economy has been slowing. We're beneath 50. So we are slowing down. We are in recession territory. But if we take a look at the actual trend, the drop is starting to slow. Maybe it trickles a little lower, but with the labor market still strong, with fiscal spending, with the CHIPS Act, with the infrastructure bill, with the Inflation Reduction Act still coming online, right? Not really hitting till 2024, 2025, 2026. The expectation is that this manufacturing sector does start to recover. And some of the signals for that are new orders. They are bottoming. They've been bottoming for the last 3 months. So new order demand is coming in. We saw the durable good orders coming in, which signals that there is a rebound happening. Supplier deliveries, right? Starting to rebound a little bit. Employment is still negative. So, that kind of balances out the labor market to some degree. We're not getting strong employment in the manufacturing sector, but you do have it in services. So that's just taking a look at, hey, what are we looking at the jobs? Jobs are flat, right? People have jobs. They're going to keep spending. There's no big downside risk for the economy at the moment. supply side pressures. This is the global supply chain pressure index. And this is what people usually, this is what economists look at to see if you're going to see any future supply side inflation. And when I say supply side, I'm saying a lack of delivery times, right? A lack of delivery times, a lack of employment. So, and you're not seeing that. So I don't expect goods inflation to really go up despite everything that you're seeing, despite the strong economy, right? Just because people come into the labor market, they keep spending, there's more jobs, doesn't mean inflation goes higher. That's only if this supply side pressure moves higher. If you get supply side pressure up, then you might actually have some wage inflation, but we are not seeing that. So how did the Fed respond to that? We had Fed Goolsbee today. He's been rather hawkish or, hawkish lately. And or you could say he's kind of neutral. So what is he talking about? You got Bostic too. Bostic had some very good comments. These are just some of the Fed governors. Fed Bostic, U.S. employment gains are slowing in an orderly manner. There's no need for further rate hikes. And, that might be why the market is responding pretty positive. Let's take a look at that. So he said that about 29 minutes ago. We look at the 30-minute chart. You see the S&P could be bouncing right off that news, right? I mean, that's not really true, but the S&P is rebounding. We are getting a rebound in the short term on Friday. And that is because we have a strong jobs report, and the Fed is speaking, and the Fed is signaling that, hey, you know what? This is actually a call for a pause. This is a cause for a pause. Now, Goolsbee's a little more hawkish. Let's hear what he says. The job market does have to get into balance, which is good. The balance is job openings come down, labor participation remains high, and you got to, and that's it. You want more supply of jobs, and you want so that employers don't have to raise wages to get people to come to work. That's really the issue, but that issue is starting to be resolved. Fed Goolsbee again. I'm hopeful we can pull off a soft landing. So he's hopeful. Whatever. We're just going to go through some of his comments. I don't think the Fitch downgrade will make much of a difference. Okay, great. We know that because there's multiple rating agencies. You have Moody's, you have S&Ps, and Fitch was kind of late. They pretty much downgraded the U.S. debt, which should have happened a long time ago. So it's kind of old news, right? Who cares? It doesn't make a difference because U.S. Treasury debt is still the number one collateral. So you can still use it as collateral, margin, whatever. It doesn't make a difference. Fed Goolsbee, we should start thinking about how long to hold rates. So this sounds to me like you have Goolsbee and you have Bostic basically talking about a pause here, right? Looking at the jobs report, talking about a pause. The market may be pricing that in, right? It may be pricing that in. So yes, Apple finished earnings. They weren't amazing, but of course, positioning was overweight on Apple. Just look at the price. So it's coming back down, but it's going to find support, or it should find support given the macro backdrop, given that people or the economy is starting to reaccelerate. Okay, and the Fed's looking at pausing here. We do have some inflation risks. We will go over oil prices, 100%, right? Also, you have some liquidity risks at the long-term 30-year rates, which is going to crush mortgage demand, right? 30-year mortgage demand. But we'll see. Fed Goolsbee, the last couple of goods inflation readings have been pretty positive. You get more positive sentiment coming from the Fed. So the picture is not bad. Now, what is this? Crypto fear and greed index. We're turning a little neutral. That's positive. We want more fear for the bounce to happen because we know psychology is backwards. When you're positive, when you're extremely bullish, things sort of slow down. Plus, you need more regulation for crypto. That was a little off topic. But anyways, back to Fed Goolsbee. Job market cooling a bit, but still extremely strong. That's a positive comment because what he's saying is it's cooling. So there is no inflation rebound in the future picture from jobs, but it's still extremely strong. So the economy is not falling apart. Or in reverse, the bears would say it's cooling. We're headed into a recession, and extremely strong inflation's going higher. Okay, well, it depends on how you frame it. And I decided to look at this more positively because you're not getting a collapse in growth. It's just not happening. So I'm sorry, bears or recessionists, it's not happening. And the jobs market is not going to bring on inflation unless supply falls apart. Okay. Fed Goolsbee, the July jobs report is pretty much what we expected. So as expected, right? As expected. Fed Bostic, the Fed is on a trajectory to get to 2% inflation. yes, we are almost there. And we'll look at Trueflation. Trueflation came in today at around 2.25%. Very positive. Fed Bostic, the U.S. jobs numbers came in as expected. I'm comfortable more, as expected. This is very positive for the market. And it makes sense why we see the S&P bouncing, why the Qs are bouncing, why the Dow's up, why market breadth continues to expand, right? We're seeing that. Fed Bostic, the Fed is likely to be in restrictive territory well into 2024. Okay. So what does that mean? It just means the Fed will, there is no way that they should. I mean, there's no reason to hike rates because we should remain, as inflation comes down and the hikes are higher, we should remain in restrictive territory, meaning that they can ease from here. There's nothing, but even if they cut rates by 25 basis points, they'd still be in restrictive territory. Even if they cut rates twice, they would still be in restrictive territory. So that's a positive, net positive for the future expectations of inflation, the market, and the economy. Okay. And that's pretty much, I mean, there was a couple more. That was pretty much it on that front. Now, the rate hikes. There's been something very interesting about the rate hikes going on, which is that even though the rate hikes are up, there's been a lot more income a lot of more asset flow income because the rate hikes being at 5.5% increase your cash, your yield, or your earnings on your cash, right? Think of cash yield. People get into dividends, right? For the yield. Dividend yields, while you're getting cash yields right now. Cash is giving you 5%. So even though those rate hikes are high and it might be constraining certain businesses, it is also giving consumers who are savers more buying power, right? Whether they choose to save it, invest it, or spend it, it is pumping their pockets, and probably the more wealthy consumers, which means the economy can stay afloat. No recession. And if you cut rates, what's going to happen? They're going to move their cash back into the market, right? And also look at this signal. We're getting the dollar starting to peak out. This is what we need. We need the dollar to roll over. And this is happening too because other central banks are hiking rates. They're increasing the value of their currency versus the dollar. So the dollar falls, right? The ECB hiking rates. I believe the Brazilian central bank, I don't even know what they're called, they hiked rates, 25 basis points. So as we come into balance, as we come into, whereas the Fed, the US Fed starts to pause, starts to slow down, and other economies might be hiking a little more or tightening a little more, the US dollar drops in value, which is great for risk assets, which is great for the market. Okay. And this is in the face of, oh no, never mind. Two-year yields, right? 2-year rates, 2-year borrowing rates also fell from 4.9% to 4.78%. So we fell about, 15, 20 basis points. Wow. Why is that? Interesting. Because the labor market is weak. Because the jobs market a couple days ago, right, signaled, where's that jobs report? That jobs report was fake. A lot of people say that jobs report was extremely excessive, and what it was private. It was the private payrolls report. The private U.S. private payrolls. Where is it? ADP. There you go. ADP payrolls came out very strong, right? The expectation was 189. We came out almost double that at 324, right? 189 consensus or 210. We came out, 50% higher, whatever it is. So that jobs report was strong. Now that's because the government has been providing a lot of government jobs, and also maybe they are fudging the numbers. But when we get the real non-farm payrolls, it was actually weaker. So no inflation there. And maybe the 2-year yield or the bond market, right? The short term, the short end of the bond market expected more inflation or a stronger jobs report. It didn't happen. The real employment report comes out Friday. It's the first. Listen, the jobs report, the labor market report comes out on the first week of every month on a Friday, right? It's the first Friday of every month. So this tells you, as we said, we'll digest the news. The bond market is digesting. Okay, not as strong as we thought, coming down. 2 years, 5-year coming down, 10-year coming down. So the bond market is now starting to reverse. Now it could be short term, could be short called, but it is starting to reverse. We also got the 30-year, which was at risk of breaking out. Now keep this in mind. This is a 12-year high breakout in the 30-year. This would extremely elevate mortgages, right? And it would crush risk assets because all your unprofitable technology companies, all the companies who have future earnings into the future, which is longer term, they borrow money. So the longer term rates, if they go higher, the 30-year, if it goes higher, that cuts their valuation because that means that it's going to cost them more into the future. So that reversed. So we should see risk assets come back up. And, what do we see? Are Qs bidding up? Yes, the Qs are bidding up. How about small caps? Yeah, small caps are starting to bounce. And we'll go through the rest of market breadth. Even crypto, Bitcoin isn't bouncing hard, but you are getting the total crypto market moving up a little bit. And this is a 30-minute chart. So basically, the risks that posed from yesterday kind of came off, right? The VIX is coming back down. Was that a buying opportunity? I don't know. Was that a buying opportunity? Okay. Volatility coming off. Let's go back to the daily chart though and evaluate this a little more. So this is Nasdaq volatility coming back down, right? Capitulation didn't really mean much. Bond volatility. Okay, this is what's going on here? Bond volatility is actually up. Well, maybe because I don't know. I don't know why bond volatility is up, but I do know the bond market is starting to come down. Now, this is really good for risk assets. If this is the top of the dollar, then expect more of. We want the breakdown, right? Once we get below this level, once the dollar is my screen. There we go. Once the dollar actually starts to roll over, right? Let's say this is the top 102.50, which was kind of scary. Once we get below, well, we got to hold below 101. That's been the level, right? We got to get down here, get rejected, fall further, and then break the next resistance or the next support, which is now 99. You're going to see risk assets in the market bid right back up to all-time highs because the economy is strengthening. Okay, the only way this goes up is if inflation reemerges, and that brings us to the next chart, which is sort of risky right now. And this is what I'm worried about. All right, this is oil. Oil prices are surging. Okay, oil prices, and I hope I'm wrong about this. I hope this doesn't, rock the market, but it, more than likely it does because this elevates the risks or the headline inflation. Now, maybe core comes down so it evens out, it balances out, but this would mean that inflation expectations go higher, gasoline prices are higher, consumer confidence goes down because their gas is higher, their energy prices are higher in general. All the things that use crude oil, right? Even for crops, oil is used for what is it for fertilizer. That all goes up. Okay, now this might just be a month-on-month thing, which is why we say, hey, we need to get above 83.50 for it to actually play itself out. Maybe it doesn't get there, right? But it is strong. Oil is strong. So maybe just get into some energy trades, right? You want to hedge yourself, get into some energy trades, right? Who knows? Either way, good jobs report. I don't think this continues because we see manufacturing is still in recession, employment's coming down. The summer is now done, so travel will end. Travel will slow down. We are headed into the holiday season, but people are doing less spending. They are spending less in general. Okay. Now the bond market got destroyed, starting to bounce a little bit. We'll see how that goes. That was a net negative. And the bond market, this whole thing is literally the US Treasury. Just to make this simple, I know I made it kind of complicated yesterday. The US Treasury is debasing the bond market. They are unloading a supply of long-term treasuries for the banking sector to buy. So when you create more supply, you knock the prices down. So just like you debase the dollar by printing dollars, they are printing treasuries. And when you print more treasuries, the value of those treasuries will drop in price. So that's what's going on there, right? That's what's going on there. And it's also a signal of a strong economy. So, again, you're kind of in this Goldilocks where inflation is coming down and the economy is strengthening, although, interest rates are still pretty elevated, but the market seems not to be, the market isn't freaking out too much. It's not really, barfing. It just had a pullback. Oh, great. We had a pullback. Okay. We're still in elevated territory. Now, moving on to the market breadth, because this is what we want to look at. Market breadth. IWM still up. Let's go to the daily charts. and look at the market internals. So what are we seeing in the market internals? Well, this is S&P 500 equal weight. Equal weight is trending up. Equal weight is trending up. So maybe this is the low, right? We had a pullback. You're going to have a pullback, and we're still trending higher. So that is market breadth right there, or market expansion, right? The rally expanding. This is Nasdaq bouncing at our support, right? Here's our previous support, right? We got resistance here back in June, or resistance again in June. Got above that resistance, held it, came back to test it, held it. So we're holding resistance, right, as support. So far, this is very positive. After Apple and Amazon earnings, which I think is basically what you want to see, the rest of earnings are irrelevant. Not 100%, maybe something slides, but we kind of know what's going to happen here. 80% of S&P 500 companies are beating earnings expectations. Earnings are bottoming, which gives me personally conviction that this is a buy, that this pullback is an opportunity to buy, because now the expectations for growth are revised higher in GDP. We know that. Now the expectations for earnings are starting to revise back up. We're leaving the earnings recession, and this is a buying opportunity, okay? And the market should reflect that. So yes, there is oil risk, but core inflation is coming down, and that's been the biggest issue. We know that oil is volatile, but that also means earnings are going up because energy is going up. So hey, things are playing themselves out. They're neutralizing themselves, and the real question is, when does the Fed really start to pause here? Okay, we're going to keep getting fiscal liquidity come into that market. More market internals, right? Let's turn over to more market internals by going to, ooh, I like this MicroStrategy. They're going to buy a lot of Bitcoin. Now you get the MicroStrategy price coming back down to that support, right? It's been a major area. We'll get into this later. I just want to point out, look, support. 3 areas of support broke, became resistance, broke above. If we get the retest and the hold by MicroStrategy, if you want to take that risk, hey, it's there. All right. XLI. So industrials, right? What are industrials looking like? Oops. What is the market showing us? Let's dive into let's go to the 30-minute chart again. Yeah, because we are now about 2 hours into the market. Okay, the market is digesting the news, and we have industrials pulling back. Okay, industrials are not strong. How about healthcare? Healthcare is bouncing. Okay, slightly. Healthcare is bouncing slightly. Utilities are rolling over. Ooh, big. Look at this. Oh, well, this is probably because of Amazon. You had a gap up for consumer discretionary because Amazon is so strong, because Amazon AWS is still the strongest cloud, and their cloud business is accelerating. Their revenue is accelerating. As a matter of fact, there was a piece yesterday about Amazon. They pulled in 127 billion in the last quarter. Are you kidding me? 127 billion, which came out to $1,600 a second. So they're pulling in a lot of revenue. Amazon is a monster, and they pushed up the ETF. They pushed the consumer discretionary ETF up. Okay. All right. Staples down. So there goes defense. Defense kind of came in as like, okay, yeah, maybe we're heading in recession. Jobs are kind of strong. Yields are going up. We better brace for it. And then no, they're starting to come right back down to support because the tech trade is back on. And yeah, the tech trade's back on. How do we know that? Well, communication services, this is more tech bottoming out here, right? Starting to get that, you could call this a reverse head and shoulders. So communication services coming up. How about financials? Oh, this is nice. This reduces the risks in the market. You have financials picking up. The banking sector still resilient. Energy sector, we already said this. Energy is moving up. Okay, so better S&P earnings. So yeah, maybe energy goes up, and I hope I'm wrong that doesn't hurt the market. But inflation is going to hurt the consumer. It's going to hurt sentiment for a while if the oil prices go up. Materials bouncing. Real estate. Real estate, I think, is trash at the moment, but the home builders ETF right back up. Okay, home builders ETF right back up. This thing has been strong all year, right? It is up tremendously. So home builders up. Semiconductors trying to recover, finding some support there. We'll look at AMD. We'll look at NVIDIA. NVIDIA looks like it wants to break higher again. KRE, regional banks, bidding right back up. Market is not worried. The market is not worried. Those are the market internals. Now let's look at the moving averages. Let's take a look at the moving averages and see how many stocks are moving above their moving average. All right. Let's go here. I know we got what up. Good morning. We'll get to your questions. Just want to get through the report, right? Market reaction, macro data, market internals. We're at market internals. We'll go over technicals and questions in a second. All right. So market internals. Well, what is this? No, that's not what I'm looking at. Right here. This is what I'm looking for. Okay. I'm gonna have to expand this a little bit. There we go. All right, so top left-hand corner is basically how many stocks are moving above the 200 daily moving average? 66. We need a recovery there. How many stocks in the middle are moving above their 100 daily moving average? 74%. How many stocks are moving above their 200 daily moving average? 65%. I'm sorry, I said that backwards. The first one was how many stocks are moving above their 50. So we have more stocks right now moving above their 100 daily moving average, which is usually the support. Was a big resistance level for most stocks, and a little less below their 200, a little less below their 50. So we're looking for the rebound there. That is market breadth, right? The trend is still lower, so got to keep that in mind. Advanced decline down here. We already went over this earlier. It's finally up. We're back in the positive. More stocks are moving higher versus declining. Volume is picking up. More volume is starting to incline or expand versus decline, right? So that's positive there. Now looking at the actual stock charts, here we are. So yeah, let's get to those questions, those comments. Got GME up there. We'll get to the questions, the comments now. Yeah, let's get to those. All right. So why did it fall so hard? We fell for one, the market was a little overbought. We got very extremely overbought up here. And you know, when the market sees uncertainty like the Fitch downgrade, market earnings, there was just a relief sell-off. Okay. So there's a relief sell-off. Then the Fitch downgrade, which comes out to nothing because who cares? Also, you had 30-year yields go back up, and that was also a risk. So right now the risk is just higher rates. But we are learning that those high rates are also fueling cash earnings, which is fueling the economy once again. Right? Turns out to nothing. Bottom dollar crypto surpassed the dollar. Why American just grow? I'm sorry, Angel, can't understand what you're saying. I'll read it out loud so you can hear why I don't understand. Bottom dollar crypto surpassed the dollar. Why America just grow with it? Got to be a little more clear so I can respond to you. Good afternoon, William. What up? Rocket GME. Check out GME. GME. I mean, I don't know. It depends. What's your game plan for GME? Their business model sucks. You know, they don't have a great business model. They only got short squeezed back in the day. People are still stuck, and this is my view. GME is trash. This was a short squeeze. This was a technical play. It's not a good company by any means, right? The stock went up a lot. People got interested. They thought, hey, this is the return. This is how we defeat hedge funds. No, not really. They just got caught with their pants down. I mean, hopefully it goes up a little bit if you're holding it. But the truth is, GME, what's going to skyrocket GME? Who are they disrupting? It's just my hard, response on that. All right, so Amazon, big gap up on Amazon. Let's take a look at that price action intraday. Holding the gap. Wow, this is very strong. Actually holding the pre-market highs. Amazon looks very strong. This is the 5-minute candles. Let's go to the 3-minute. Take a look at that price action a little sharper. Yep, there you go. You got a falling wedge. Got a nice little falling wedge here from Amazon. I'm sure it's above VWAP too. That breakout could be a nice little trade there. Take a look at the Qs. Trying to get above the the pre-market highs. We're not there yet, so we're still in neutral zone. We haven't really filled the gap yet. SPY or SPY, same thing. Looks exactly like the Qs. Is Apple recovering? Apple's headed for new lows at the moment, but there is a lot of support here at 185, which is the previous all-time high. Okay, previous all-time high for Apple. Tesla. Ooh, Tesla looks very bearish. Had a nice up move in the morning. And you don't really want to see an up move and a rejection that hard. So Tesla is getting rejected by the previous day close. It looks like this, by just looking at the prices, it looks like the day will still end negative for a lot of big tech. Good morning. How you guys doing? I appreciate it. Brisi. Appreciate the love and the roses. Thank you guys. All right. I appreciate it. Got the charts over here on Bluetooth, just so you know. Just go subscribe, go follow to get my content. Help me out on the YouTube channel, trying to grow that out. I would appreciate you guys. Thank you. So, yeah, Tesla getting smashed here. Not smashed, but Tesla finding a lot of resistance at this 259, 260 level. That has been the zone of resistance for the past, like, I'd say a couple weeks. Well, since earnings, really. You had, well, this is kind of sloppy. You don't really want to look at this, but it looks, you don't want to look at this. Let's go to, let's take off the, what we got to do is take off the pre-market and then take a look. There we go. So yeah, that zone has been either support or resistance. Now it's turning into resistance again at the very top of the channel. So Tesla's still bearish, but the Qs are bouncing. So you have some, you got some hope there. Hopium. Palantir pulling back into the trend pretty strong. Google, no real reaction on Google. Again, let's take a look at Apple. Apple needs to hold the 185 level. That was the all-time high, I believe. So you really need to get past that zone. We slipped all the way to 183 this morning. Wow. Amazon, strong. Like we said, Amazon's pulling back a little bit. Probably some entries there. AMD. AMD and NVIDIA are going to be interesting. These are the chips. AMD is forming a gigantic wedge, right? Right off of 108. It's been like 108, 107. I'd say 108. And once it breaks out of this wedge, this should be a big move. But AMD is tricky. You really got to wait for the momentum to come in because AMD will collapse on you. It'll absolutely collapse on you. It's happens all the time if you're familiar with AMD. NVIDIA, same thing, forming a descending wedge or flag pattern. You still have more time. Now, the market could still be bottoming here. So if we take a look at the Qs, because they've been leading the rally. So let's take a look at the Qs. The Qs could be consolidating at this level, 372, 373 for a while. So it's not, we're not in the clear yet. We're not in the clear yet. It always comes down to what is the inflation picture, which we should get in the next couple of weeks. All right. No Fed meeting either. No Fed meeting in August. No rate decision, not till September. And that's going to be important. So we do have a lot of price action to be taking place without the Fed speaking. We will have speakers in and out. Today was very positive for the speakers. So that was one thing to look at. Who else do we have here? ARKK. Let's take a look at ARK, risk assets, innovation. Oh, they're down, not up very much. Do you know about the clowns coming back? Don't know what you're talking about at all. Oh, good. Brian Zerb. Love the question there. Love the question. What do we know? What do we think about? So, Brian, It says, I noticed a small jump in M2 money supply. What is that telling us? In my view, that's telling us that the combination of fiscal policy and let's put it this way. For number one, fiscal policy is working, right? So the increase of the White House CHIPS Act or Inflation Reduction Act, that's creating more money. Also, the US government is creating more money by selling. Yes, they're draining some of the banks, but Brian, I think what's really happening is the reverse repo facility, right? We always talk about that. Hopefully I don't bore anybody to death or lose you here, but this is something and I'll try to make it simple. First, let's go to this chart. See that interest on income on assets, right? Yes, it's lower than the interest payments, but the interest payments, if you have debt, that's draining your pockets. But if you have cash, you're getting, if you have cash or dividends or treasury bonds, the interest income on assets is rising considerably. So dividends, dividend income is up, and look at the billions. We're up at 120 billion, went up to 150 billion earlier this year in dividend, not just dividend, but assets in general. So you count cash, bonds, not crypto. I guess you could count crypto kind of, but not really. Cash, bonds. Is there any kind of interest payments on commodities? Maybe, I don't know. Mostly cash and bonds. The interest income was at 150 billion, all-time high. So yes, interest rates are up, but these instruments are yielding more cash into the system. And at the same time, you have Joe Biden, right, or the White House printing money into the system. And next chart, we're talking about the money supply moving up. Next chart is sort of an echo of the same thing. Disposable income, because we have dropped. Now, the whole government spending tells us that. Oh, no, I'll go back to the other one. The whole government spending is showing us that disposable income and compensation is outpacing inflation, right? So now that inflation is down, what that means is it's not eating away at money. It's not eating away at earnings. And now your earnings are up, compensation's up, income's up because of the jobs that are being created. The unemployment rate is lower. So you're just getting this macro shift of more money supply coming into the system, because the rate hikes are also pumping cash, right? The money market funds are collecting 5.5%, and they're paying customers that 5.5%. And at the same time, the US Treasury is draining the reverse repo, which is the Fed's money. All that $2.5 trillion is coming off, and it's going into the US Treasury general account, which gives the White House more money to spend. So I think really just the macro forces are starting to turn up. Like I've been saying for a while, they're turning up. It just takes a while. It's slow, right? The biggest negative is just inflation stays lower. And that's that chart. Treasury general account, I mean, we can look at our big chart. I want you to check this out too, Brian. Check this out. 30-year rate. So this is what's going on. You see the long rates are now outpacing short rates. So the yield curve is actually steepening again. It's going back up instead of diverging. And what's happening here is the US Treasury is now supplying more bonds at the long end. So they're pushing rates up at the long end. And typically people are like, oh my God, yeah, that pushes up mortgage rates to some degree. But at the same time, when those 30-year rates go up versus the 2-year rates, you get a steepening yield curve, or a normalized yield curve. The yield curve should go up where short-term rates. Now, this isn't the case yet, but if this continues, it would be. And the point here is short-term rates, you want them lower than long-term rates, because that's how you fund growth. You have shorter-term rates because people borrow for the next 2 years to pay, payrolls, whatever it is, and short-term contracts. And if those are lower, those come down, you're getting a yield curve balancing itself out again. And that signal just means, hey, yes, the mortgage rates might go higher, but you're really just looking for the yield curve to normalize. And that's what's happening here. I think that's positive. Biggest risk, again, before we get to the actual TGA refill, is right here. This is the big risk. I mean, we see this all the time, right? Above 83.50 can reaccelerate headline inflation, but we might see core inflation come down. So I am worried about this the most, Brian. But here's what this does: it doesn't slow down M2. If this breaks out, M2 money supply continues to increase because there's more earnings for energy companies. Consumers are still paying more because they have jobs. Their incomes have rebounded. There's enough jobs out there. Inflation may go up on the energy side, but it's not going up on the core side. Your services are not going higher necessarily. They could, but they're not necessarily going higher. And this has nothing to do with goods inflation. So I think that's it. The money supply is starting to turn up. Also, global central banks are tightening, right? You got global central banks tightening, some of them tightening versus the Fed. So the dollar's coming down. That's going to ease financial conditions. And let's go back to KRE here. Yeah, this is another part. I wonder if I can find it this way. TGA? Maybe not. Oh, you know what? I think I already have it up here. Yeah, here it is. The Treasury General Account. Dude, why do they keep removing these? They keep changing this on the Fred website. It says this doesn't exist. Oh, you know why? It's a 30-minute chart. That's why I got to go down the daily. There we go. Got to have that stupid button there. All right. Here's another reason why money supply is going up. And let me see. The best proxy against this chart is probably going to be. Let's do the VIX. Okay, VIX is coming down a little bit, and you're getting the Treasury General Account. Actually, let me just remove this. You're getting the Treasury General Account, or the ability for the U.S. to spend money go up, right? This is their checking account, and that's going up because they are selling U.S. Treasuries, are creating more debt, and on the short term and the long term of the bond market. And so when they sell that debt, they get more cash, and then we keep spending, which is my whole thesis has been this whole year. The reason why I think the market has bottomed. Right now, we're on to bull market. I used to be, oh, the market's bottom, it's over. People argued. Now they're increasing their price targets, and we could take a look at that. But now I think we're going all-time highs because the government will keep spending. Inflation's coming down no matter what. No, I'm just kidding. But inflation should come down. Core is going to come down. Shelter is lagging. Shelter prices are going to extremely pull down inflation at some point. We will see that. And those lag effects will come into play. So as long as the U.S. Treasury has more money, Joe Biden will keep spending. He has the lowest rating since who? He has the lowest political rating since Lyndon Johnson, I think. And what do? More spending, right? More student repayment, or I'm sorry, student loan stimulus, more stimulus for anybody. He's going to keep spending because people love when you give them money. So I expect this to continue. You want a strong economy. He wants to brag about it. So he's going to keep spending into the back end of the year. He keeps doing more announcements. I always track this too on the site. I'm sorry, on my newsletter. But we're seeing that. So I think the Treasury General account keeps going up. And then really, this is where the cash is coming from too. This has been a net positive, which is, just think of this chart as a lot of money basically left the economy over the past couple of years. It left the economy and then it peaked in December, right? And now it's coming back into the economy or the banking sector or capital markets. So now the money is starting to come down, and as it trickles lower, you're refilling the capital markets here. You're refilling the U.S. Treasury General account. You're refilling the economy, 2 deviations lower. So that money's coming back into the market. The big negative here is this, and I expect this to turn around. Maybe it doesn't. I could be totally wrong about this, but I expect this to turn around. This is just the Fed's balance sheet, right? When does it turn around? And the question here is, will the Fed have to reverse and start, monetizing the debt? I don't know. We just got to keep our eye on that. But for the most part, yes, money supply is turning up. And let's take a look at global liquidity. Actually, that's an indicator. Fed net liquidity. Let's take a look at Fed net liquidity. So Fed net liquidity is kind of suppressed right now. This is Federal Reserve net liquidity, blah, blah. It's the details are, you know, they're whatever. You don't really, it's irrelevant. But look at the S&P. This is another reason for the S&P to pull back a little bit. Oops. Because Fed net liquidity has been slowing down. Although I say, hey, well, guess what? Treasury liquidity is going up, right? US Treasury liquidity is going up. So this doesn't even count that. Take this off. Now let's add. Am I unable to? Oh yeah, that's right. Global liquidity. Bro, come on. It just popped up for me earlier. Global net? No. Where's the global net liquidity? Huh, that's weird. Um, oh, my bad. It's an indicator. There we go. Global liquidity. Okay, I can't even work my own station here. Global net liquidity. Let's go to global net liquidity. So, and this pisses me off. It goes on the bottom, but global net liquidity sort of bouncing here. This is the ECB, the US, China. This is China. This is Japan. This is the ECB. And this is liquidity when it comes to all the central banks, minus the TGA, blah, 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 starting to bounce. So we're bottoming out in global net liquidity here, right? So either way, I know the liquidity picture for the Fed might be lower, but global liquidity is turning up. Another reason, and I love it, Brian. I love it, Brian. I love the question here because what's really going to happen, and I know this is a prediction, but this is where you make all the money, or this is where you really succeed, is understanding that China. Oh, dude, what am I doing here? Let's take this off. Understanding that China, they have to print, bro. Right? The economies are slowing. China will, so that net liquidity, global liquidity will turn back up. And I think Bitcoin and crypto is going to just start to rip again, or at least start to push the 30K level. Because when China prints, guess who benefits from that? Tesla, Apple, multinational companies, and so does crypto. Hong Kong is trying to become a hub for crypto. So that global liquidity will come into play because China has to print. China will start printing. And mark my words, we're going to look at the charts. We'll go look at a Chinese. Actually, let's take a look at liquidity in general. I know I put this on my macro report, so you guys probably look at it, or you guys probably pay attention to it. But global M2, come on, M2. Oh, let's just do M2. All right, so M2 growth, Fed, ECB, PBOC. Now this is versus Bitcoin. So because it's, we all know Bitcoin goes higher because of that. Let's take Bitcoin off. Let's turn this chart into a year-over-year chart. This is a cool little website too. It's called Macro Micro. A lot of stuff. I'm still learning it. And let's turn this into, let's take off the Bitcoin. We don't really want to see that. We want to turn this into a line chart. And you can see liquidity has M2 growth, money supply growth has hit the bottom in October, and that's, I think, one big reason the whole market bounced. Now we're grinding higher. We're not going to go straight up. So we're in a pullback from when it comes to money growth in June. So July, August, right? This money growth should start to incline. Every time it bottoms out, it goes higher. So we should see M2 growth go higher because globally, as a general rule, when economy's slow, you get more liquidity. When economy's slow, you get more liquidity. That's what follows recessionary environments, more liquidity, whether it's lower rates, fiscal liquidity, or the central bank debasing the currency. Now, currency debasement will be the strongest case for risk assets and technology, and we haven't got that yet. We've just had fiscal, which strengthens the economy more so. All right. So that's kind of what we're looking at there. Unfortunately, Chainlink had a sharp pullback, but hey, we're still in the bull trend. Tokenization is set to really be the TAM for tokenization is 16 trillion by 2030. Yeah, projections are projections. Some of them are magical, hopeful, whatever. But Chainlink is a very small market, has a very small market cap, and Just stay tuned. Tokenization is coming. Larry Fink, right? Whatever you want to call him, he's calling it. A lot of banks are calling for this tokenization era to start. So that's what we're looking at. Anyways, yeah, for sure. I also want to point out let's look at this. Let's take a look at the projections, because look at the market is trading sideways today. There's not going to be a whole lot of action. If you want to look at some technicals, we can go through the technicals. Let me know what you want to see. But for now, we're just delivering some market internals, some commentary, get you used to kind of what's going on here. All right, so let's take a look at this chart. This I think we took a look at this earlier in the week, but this is basically, can you guys see that? Let me zone in there. There we go. Oh, you know what? See if this works better. Okay, I'll just open it wide. There we go. Let's open it wide so we can see the whole thing. There we go. Okay. So Wall Street's 2023 outlook. Before we go over this, please like the video, like the live, give me some likes because I said so. No, I'm just playing. Help me out with the algorithm. Okay, let's get the likes up. I'm going to go to the restroom really quick. And then we're going to go over through Wall Street's 2023 outlook and why this is a market bounce, right? Why we go higher here. I'm going to talk you through this. All right, so let's get through this. By the way, I'll keep track in my rear view, in the rear view mirror, what the market is looking like. We got IWM making new highs on the day. You got SPY testing the highs. You have Qs testing the highs also. And hey, maybe the market doesn't roll over for the rest of the day. Tesla sure looks like it wants to. Dow pressing higher also on the day. So Wall Street's outlook for 2023. All right, Bank of America has an outlook of 4,300. We're above that level already, and they actually increased their price targets. But this is the revision here. Barclays 4,100, BMO 4,500. We're already above. We're at the level, right? So we're at the level, and this is basically not position, because the market is comprised of three things, right? Positioning. Well, market movement really comprises of these three things, no matter what: positioning, sentiment, and expectations. Regardless of your fundamentals, regardless of the macro, even the macro, it does matter. Don't get me wrong. But either way, price moves because of the combination of positioning, sentiment, and expectations. These are expectations. The reason Apple went up and Amazon went down is because Apple positioning was overweight, Amazon was underweight, even though both of the expectation and Apple's expectations weren't that great. Stock went down overweight, right? Amazon's expectations were met and exceeded while they were underweight, price went up. So that's how the market moves. Now the question is, you got to guess what are, we don't know what the expectations are going to be. That's the market reaction, but the positioning we can see, and the expectations as far as price targets we're looking at right now, right? Sentiment, you can get a feel for sentiment. Sentiment is still negative, but it's getting a lot more bullish. Sentiment has been improving dramatically over the past 2 months. Okay, and I've been saying, well, I'm not trying to ring my own bell here, but if you're new, we've been calling for this for a while. Now we're in consolidation. I still think we're in wave 2 FOMO. Given the backdrop, the biggest fear is the price of oil slowing that down. But either way, we go higher from here because the Fed's going to pause. All right. So these are the S&P targets. Now, some people have revised up, right? Citigroup, their price target is higher. Credit Suisse, price target 4,700. We haven't hit that yet. That's year-end target. So the next 6 months. Deutsche Bank 4,500, about where we are. Evercore, about where we are. Goldman Sachs break even where we are, 4,500. JP Morgan Chase 4,200, and these are, certain analysts. Mike Wilson, everybody hates him now because he was so wrong. 3,900. He's calling for $185 S&P earnings, and so far earnings are beating. Keep this in mind. 80% of companies have beat earnings right now, and now GDP is revised up even higher to 3.9% for Q3, which means earnings are going up. Even if oil prices go up, earnings still go up. All right. Oppenheimer. And the way it works is if oil prices go up, consumers pay more. So the consumer weakens a little bit, but earnings still go up for companies. Certain companies. Oppenheimer, 4,900. They just upped their price target to 4,900. So, man, a whole 1,000 points ahead of Morgan Stanley. Very interesting. And they just cited, inflation's coming down. And we'll go over some more of these reports. We got 30 minutes left in the stream. Please hit the likes. Help us out on the algorithm. If you got questions, comments, concerns, let me know. Oppenheimer 4,900, RBC Capital 4,200, lower from here. UBS 3,900. I didn't know they had a 3,900 price target, so UBS is lower. Wells Fargo is at 41, and that's sort of the outlook there for Wall Street. I'm gonna look at some more stuff. Let's get back to the price action, and that just tells you, that kind of signals to us that the market isn't, or analysts, at least professionals, right? Fund managers, they're not fully invested yet. They still have a lot of cash on the sideline. And fair enough. First, I said, oh, they have cash on the sideline. They're missing out, but they love the cash. They are collecting money on their cash there. Also, think about the companies who have cash and money market funds. They're still collecting 5.5%, which kind of erases, you're getting paid more for parking cash than the inflation rate, which means we're beating inflation. Right? We're beating inflation. This is going to take time to resolve itself. So you got ARK, SPY, and I'm going to go back there. I want to see what they're saying now. Okay, S&P is moving up here. S&P is now moving up in the day, breaking above the pre-market high. This is a recovery, all right? After the jobs report, it is digesting their market report and saying, okay, the economy is definitely strengthening, but it's not exploding. So we're not going to see inflation here. Great. No rate hikes, right? Yields came down. That's really the story here. Bond yields, TNX, if you ever want to see what bond yields look like on TOS, just put in TNX. Bond yields came down. So this eased financial conditions. Thank goodness. I think the bond market was trying to front run the jobs report by bidding up so much from the ADP payrolls back on Wednesday. I think it was Wednesday. And now that the bigger indicator, the non-farm payrolls came out weaker, sold off. Not as strong as we thought, right? Back to S&P. What's you say? I hate what's Tesla doing? Tesla just reversed the trend for the day. Let's see how it goes. Yeah, let's take a look at Tesla. We were looking at it earlier, and I'll leave it on Tesla while I go through some of the commentary. Tesla's tough. These are the areas where I just wait, because Tesla is going to trick you so badly. There's nothing to really look at here. You got to wait for that momentum to come back this is the downtrend. If you're on YouTube, this is the Tesla downtrend right now, which is a bullish pattern because we're coming from the highs, right? We're still coming from, like, if you look at the bigger term chart, we're still coming from a bottom, right? Very bullish technicals here. We've broken, so we're still uptrending. Hey, maybe Tesla does come back just like it did earlier in the year. Maybe it does sort of descend back into the trend and then start to pop higher, right, on the next earnings report. Or there's a run up into the next earnings, possibly because China grow. I don't know. I think there's a lot of growth incoming. You got Cybertruck. You got a lot of stuff. So Tesla could be consolidating. If the overall market moves first, Tesla's going to move up. But if it just consolidates, then yeah, we're going to be consolidating. That's the Tesla backdrop. The real pressure is above 300. And that's when more shorts get squeezed and you get wave 2 FOMO. But right now, yeah, Tesla just consolidating. I'm thinking if it goes back to, I don't know, I might sell calls on it. I should have done it on earnings, but I didn't, because I thought, hey, I'm going to take the risk that earnings take us above that 300 level. And I was wrong, and that's fine. That's fine. But that's the best you make. So I'm still waiting for Tesla. It's still holding strong here. We'll see how that plays out. Back to the actual. Oh, what up, Slime Z? Manny, good morning. Back to the market report. Oh, wait. What am I doing? I don't want to switch your guys's. I don't want to switch the actual. Sorry. We'll keep it there. Actually, we'll go intraday too. Let's go 3-minute chart. Tesla at VWAP. Getting back. Hey, Tesla is now supporting that trend. Let's throw this on the trading chart while we talk about market commentary. We need Tesla above VWAP, man. You need Tesla above VWAP if that's going to have some sustainability. Oh yeah, let's get rid of this. That's probably why my charts look crappy. So yeah, we'll see how this plays out. Amazon's really in play. So it's breaking down a little bit. Oh, false break. A lot of people got caught up in that false breakout. Look at that false breakout. False breakout and just got slammed. Ouch. Ouch. So what is the signal to get out of a false breakout? You even got volume coming in. That sucks. Because you did have, oh man, what the heck's wrong with my volume? You did have volume actually come in on the breakout. I wonder if some news came out. That makes me wonder. See, let's take a look at this volume. You did get volume on the breakout, so this is a big shakeout. Look at this volume, elevated volume on the breakout of the falling wedge, and then it started to roll over. Where do you exit? You exit probably, you get below these moving averages. Here's your support. Some people just say, hey, if this doesn't follow through, I'm out of here. But here's your support. Once the moving averages cross each other to the downside, you got to get out. That's real momentum. You get a moving average cross. Okay. The 9 EMA or the shorter time frame crosses below the higher time frame, and you break below support. That's you got to exit that trade. Also, on the breakout, if you have shares, you take some off, right? You take some off to cover the cost of it. Now, I think Amazon will still recover by the end of the day, but that was just some market price action that didn't work out. You could also see that this is maybe forming a bigger wedge, right? You could just be seeing a bigger wedge form here. I guess that's not the prettiest wedge, but you could be seeing a bigger wedge form there for Amazon price action. Tesla just got trended. Oh, okay, read that already. All right, now let me go to the actual, see what Wall Street is talking about. What is Wall Street talking about here? Raising rates in the tech trade. I'll get this later. Okay, what is this? AI. This is about AI. So we got August 4th. That is today, Friday. This is a report from Bank of America on AI. This will be interesting reports. Take a look at this. I'll change the chart here to let's get this chart on AAPL. Apple needs to recover to get this market going. And it does look like Apple's starting to recover a little bit. Get this chart into balance. There we go. Okay. 1 minute. Nah, you want to be on the 5 minute. Let's check out the 5 minutes. So this is Apple holding the pre-market lows or yesterday's lows. I think this is just a pullback in support of the all-time high, right? So Apple, big headwinds here. Let's see if it can break that downtrend and get back up. Actually, no, let's keep it looking like this because this will show us yesterday's lows. All right, so this is from Bank of America. And it says this little known data center service could see AI tailwind, says Bank of America. Who is this? Vertiv is a well positioned for gains as its margins recovered thanks to the artificial intelligence boom, according to Bank of America analyst Andrew Obin upgraded the data center services shares to buy from underperform. Okay, and these are basically the institutions increasing their sentiment, or not necessarily positioning, but they're telling you should go position. You know, they upgraded from underperform to overperform, or I'm sorry, from buy to under. Oh wait, what? Shares to buy from, oh, okay, to buy. Yeah. So they went from underperform to buy. So they're saying we're buying it. Now, are they really buying it? I don't know. But they did raise a price target 54% from 40 to 26, or to 40 from 26. That's a big increase. And this is Vertiv. I wonder I don't even know what this ticker is. I want to see what it is. Interesting. Okay. Vertiv, not sure what that group is. Implies the stock has potential to gain another 18% from here. We view Vertiv as benefiting near term from a margin recovery and improving free cash flow generation. Artificial intelligence adoption within the data centers adds incremental demand for Vertiv's thermal management products. Obin added that Vertiv price pushing managed to add 9% to its revenue growth. Great. Well, I don't know what Vertiv is. VRT is the ticker. Let's take a look at VRT. See if this is what the technicals look like on this. Oh, this thing is moving now that they increased it to 40. Man, this thing is up 35%. Let's look at the long-term chart here. So this is an AI play, huh? Never seen it. Never heard of it. Vertiv. Goldman Sachs also increased price target. So AI is still getting started. You see, the AI narrative is just, that's why I think big tech, that's another reason, another variable big tech goes higher. AI is still playing itself out. It is creating in real time better margins and lower supply costs, better productivity. Seeing that in real time. Looking to swing Tesla. Hopefully we can fill gap first to the downside, then calls. Okay. Apple sold the whole market. Yep, whole market counting on Apple. I mean, Amazon's a big chunk too, but for sure, Apple needs to recover. So Tesla, looking for the gap, huh? Where's the gap on Tesla? Is there a downside gap here to be filled? Let's look at that gap. Boy, it looks like it filled all the gaps. It looks like the only gap to be filled on Tesla is really the big monster gap down at 235. Is that, if that's what you're looking at, then good luck. No, I'm just playing. Could do that. JD. Oh yeah, JD. You said JD is a great play. JD. Let's take a look at JD. Chugging along there. Oh yeah, we looked at this the other day. Reverse head and shoulders on JD. Reverse head and shoulders breakout above 38. Tesla to 230, maybe. If the overall market sells off, yeah, I can see that. For sure. I can see that for sure. If SPY comes down or S&P drops, and right now it is showing some strength, but it's probably going to wedge. If SPY comes all the way down to 442, then and Tesla gets like a couple bad reports, it'll probably trade down to 235 and fill that gap. SPY has two gaps, 445. And this is good price action on the daily if we keep this up for SPY. That strong tail, right? That strong hammer tail. Is that what that is? A hammer? Anyways, it's capitulation right off the previous day close. QQQ, same thing. Very strong candle. Dow just gapped up. IWM gapped up. You know what else moved for the first time in a while? Emerging markets, EEM. EEM is a ETF for emerging markets. It looks like they're trending up, probably based off the China news. China promising to stimulate. They're literally like they're giving you China's literally handing you over what they're going to do. We will stimulate, we will support our markets. That's what they've been saying. Um Apple services, this is the big positive. Apple services growth is trending higher. In Q3 of 2022, it was at 12%. Q4 dropped to 5%. Q1 6.4%. Q2 5. So we're back at 8%. So for the past 3 quarters, Apple's services revenue has been gaining ground. And that's what really performed. Yes, their iPhone sales and Macs were kind of, because people are not spending on goods, right? iPhones and Macs are hardware, but they are spending on the services. So you're getting that. You know what I haven't seen is Baba for a while. You're jumping around 240. Tesla could do 200 and turn around in the same sentence, do 400, 300. You know how it moves. Yep, 100%. 235, 241 gap on the daily. Yep. Yep, that would be that'd be painful for me because I have some calls down there. But that would be healthy for Tesla to move all the way back down. It's going to bounce hard. Look at Baba just trending up. Baba just trending higher very nicely. Like to see that. Nice trend on Baba. So yeah, I expect the Chinese central bank to fuel the market here. Chinese central bank to fuel the market. Where's the, let's see if there's any macro insights. Oh, we already heard about this. They keep talking about the Fitch downgrade. Ooh, was this about China? Upgrades India stocks. Oh yeah, India's economy is growing too. India is expanding. That's another big positive. A lot of expansion in India. And this isn't, I'm not really endorsing any Indian stocks. I really don't even know what they are. But my point is if the Indian economy continues to expand with Japan expanding and obviously China restimulating, global liquidity goes up. Global liquidity goes up, man. Up from here. Oh, yeah, yeah. Used to be a teacher. Meta. Oh, did Meta sell off? Take a look at Meta. Meta, did they sell off a little bit? Dang, Meta didn't even move. Barely. Telling you, big tech is, I mean, Meta, here's the thing about Meta. I don't want to say they control, but they own what? They have 3 billion monthly active users. Are you kidding me? That's insane. They own half the world. They get all the attention. They have so much data. And whatever they're doing with AI is only going to expand that. Probably the only other network that has better data is maybe X, Twitter for business, because obviously that's more, Instagram is more, it has business services, but a lot of it is like it's not really it's just different types of attention versus Twitter. But they own so much data that people are betting on data. So that'll be interesting when they come out with an app. All right, so let me check up on some of these swing trades I'm looking at. I am looking at um screen is on YouTube. Screen's on YouTube. If you're interested to see the charts. So ZM, ZM, I'd have to remove this. We got to redo this. So ZM, it looks like we now have support, and they haven't reported earnings yet, but here's a clear support at 68. Yeah, SPY is still strong, 100%, Manny. SPY is strong on the day, making new highs of days, and the Qs are trying to break out. IWM. Oh no, I'm sorry. Qs are pressing the high of day, but IWM is picking up, so you get that market breadth. ZM, a lot of support there in ZM at 68, 70, right? And don't forget the big long-term trend, long way up to go, right? Back to the highs. Maybe this takes another 16 months. Oh, shoot, wrong tool. Maybe this takes another 16 months, but from here, from 70, you basically have a 700% return back to the highs. And if it breaks out, ooh, a lot higher from there, right? Now there's a lot of you got to respect the 125 price on Zoom also. That's a big resistance. 125 and 90, I would say 125 and 90 next resistance levels for Zoom. Let's just do 100, and then 125. And then what? Next level we're looking at is somewhere around here, 90, 85. So you got 85, 100, and then 125. And then from there, I mean, it's pretty vertical. You don't have resistance till 175, 200. So I'm excited to see what they say on the earnings call. Roku is pulling back at the moment. Roku is pulling down after that big. So again, you want Roku to pull into that previous support at 77, 78. Still not there yet. Open door, I think, is consolidating now, finally, for that big push higher. AMD setting up nicely. Now that's a good sign for AMD. That's a really good sign for AMD. You see that wedge is starting to form, and this is on the weekly chart. So you see the wedge. Let's go to the daily. You see the wedge is starting to form on here. Also, let's throw on the, see what these averages look like. Trying to get above that 50-day moving average still. But AMD is very strong. I mean, this breakout, the clearing, the whole, I think it needs to hold 117. And it's done. It's almost done it before. Like it held it, what, 1-2 times. It closed the day above it twice, and then it sold off. So maybe we got to get above that. Maybe we say 118.50, 119. You could just go to 119 and say it needs to hold 119. Because it hasn't closed a daily candle above 119. Yeah, let's go 119. Maybe you need to close above that. Which there's a lot of room down here. Your support's 110, so that's a big move. But depends on how you're trading it. Okay, AMD, and then let's go to, see, I can't remember what I even, is Airbnb and PayPal, SoFi, SQ, Tal. Oh yeah, Teladoc. We got to keep a. We got to get take an eye at Teladoc. TDoc. Oh yeah, nice. Teladoc is pushing off that previous support, getting above 2650. Looking pretty well. I got the 2025 calls. Oh, SPY breaking out. S&P breaking out at the moment. Q's pressing the previous high. Let's check to see if there's any news. Anyways, this is Teladoc. Teladoc has a lot of room back to 300. I mean, this is basically a 10x from here. Imagine those options. Okay. SPY. See if there's anything immediately that we're seeing. We got about 5 more minutes before throw your questions, comments, concerns if you have any. Remember, this weekend I will not be going over the Mac report live. I will have a report out though. I will send it out in the newsletter. Link in the description in the bio if you are interested for that. Kind of simplifying I'm going to try to make things more simple. I know I put a lot of information in there. I'm going to try to simplify it a little better. But I'll send that report out. Biden issues executive order to screen outbound investment to China early next week. U.S. and China to open communication lines after diplomatic push. Interesting. I don't know if that's really relevant at this moment, but market is bouncing. The travel trade. Oh, you know what? There's a lot of travel stocks. As a matter of fact, let's take a look at what we're seeing there for the travel stocks. Any crypto news? I don't think so. Crypto's so boring right now. Everybody just keeps talking about the same thing. Everyone just keeps talking about where's the ETF? Where's the ETF? You just got to be patient with crypto. You got to be very patient with crypto. When it turns, it turns. It moves, but you got to be patient. Okay. All right. Yeah, let's check that out. Let's see who is moving today. I'll put the screener on so you guys can see how I do this. When I do look at something. So I go to FinViz. I already have we can see on FinViz that the RVol for the Dow is not very good. Nasdaq is up over 1 relative volume. So the Nasdaq has the most volume, followed by the Russell 2000, followed by S&P. No, actually followed by Dow, then S&P. So Nasdaq, Russell or small caps, S&P, and then Dow. Dow, not a lot of relative volume today, but it's been up for a while. Biggest mover, you got top gainers here. Tupperware, I guess, is still moving. I know some people are asking about Tup. It's a trade. It's going higher. Anyways, what I do is I go to my screen. Oh, you could see the big window too. Everybody's up except for Apple. I think. Oh, now this reminds me. I think there's a rotation out of Apple because it's been up so much, right? Overweight, and I think that positioning. Dang, Microsoft is up a lot. I didn't even see that. Microsoft is up today. MSFT. Microsoft consolidating. I've seen this price action before. I remember after the pandemic, this is what Microsoft looked like. It would consolidate and then it would just explode. So Microsoft looks really good. It is breaking, it is testing it's ready to break a downtrend. Just FYI, Microsoft looks really good at the moment with a great support at 325-ish. Anyways, back to that chart. When I go to the screener, let's see who's moving today, relative volume, who has the most volume. Turn this into a chart. And then let's go to the 5-minute. TD is a growth stock, 100%. TD growth stock, BA Love. Oh, okay. MAG had to buy in the big man. Okay. MAGT. What is that? Amazon, DK&G, DraftKings. These are the ones that are just moving. SQ, Block, American Superconductor Corporation, AMSC. I think this is the thing that's been moving extremely big. This is a big wedge. AMSC, big wedge forming in the day. Whoa. That's a AMSC with the big breakout in the wedge. There's just a rotate. This just reminds me of rotation. A lot of rotation. Market is very strong. Very strong bottoming at $11 on AMSC. AMSC. Let's where is it on here? AMSC. Here it is. Yeah, check this out. Look at that wedge forming. Why isn't it letting me zoom in? There we go. Nice little wedge forming there. I think you have tools on here too. There's the wedge break, AMSC. All right, I'm not going to keep looking at that. What else we got? Hey, I haven't. Oh, this isn't DocuSign. Sunrun getting smashed. Redfin. XLY. Who is this? Consumer discretionary? Yeah, that's from Amazon. Just a big gap up. Not much movement yet. SPR. Spirit Aerosystem Holding. Okay. Extra. Communications equipment. I can't wait for Zoom's earnings. I'm gonna look at the daily charts. What are the daily charts looking like on here? Fortinet, that one looks pretty solid. I did AMSC around $4. Dang, GSM, a great play debate. Yep. You reacting to songs? This is a financial markets live, by the way. Oh, can't wait for Palantir should smash earnings. They have so many contracts. I'm so underweight Palantir. I'm pissed off, but still waiting for that pullback to $14. It is what it is. Yeah, Palantir earnings coming up. That should be nice. Yeah, this is financial markets, macroeconomic news. If you're looking for entertainment, then you gotta love the markets on this one. Educational purposes, politics. No, it's not politics. We don't really do politics, but we do. We definitely do news. Oh, you know what? That's who we didn't look at. Netflix. I'm gonna turn to this chart. Looking at the Netflix. Ooh, that looks nasty. It looks like it could break down. Reverse head and shoulders there. See that? Reverse head and shoulders on Netflix. I mean, I'm sure people will try to short it. But it's just a very strong stock. We're not at the highs. So here's your not reverse head and shoulders. I'm sorry, head and shoulders. Right? This thing cracks, boom, retest and goes lower. Really looking for the dollar. All right, we're at 1:30. We're at 90 minutes. Okay, so let's wrap it up. Unless you have questions. That's funny. We don't do politics and it stays out. That's awesome. And I feel clear. Yeah, politics. I know every time I mention Joe, it's so funny. Big man's coming. When I mention inflation is going lower, people take it political. No, it's not. Just because of who's in the, who's in the White House, which I really could care less. Are you kidding me? At this point, it's a joke. Like, I don't think it's a joke. But this is not about politics. This is about money, and they do it for the money. So anybody in there would be stimulating and not refilling the SPR, because this is an economic battle first before a social battle. It's about economics. Um, Without a strong economy, your politics don't matter, basically. So, anyways, yeah, people get upset when I mention stuff like that. When I do mention, inflation's going lower, they take it personal, including my mom. She's she loves tea, and so I do too. I like them too, but whenever I say the economy's strong, she just takes it personal. I'm like, bro, it doesn't, like, come on. Also, if I say, let me see what else is it. Oh, the infrastructure, the fiscal stimulus is saving the economy right now. Boom, takes it personal. It's like, oh, well, this inflation's going higher. Don't even know where inflation comes from. Most people don't they put too much politics in their understanding, but the market doesn't care. It just cares about, the market is really saying, hey, we're headed into an election year. You're going to probably keep spending, so let's go up. Anyways, let's say Netflix did sell off. I just see a pattern here, or I just see a nice support. So I just want to draw it. There we go. If it does break down, there you go for Netflix. That could be a possibility if the market rolls over. For Tesla, it would be, I think it's right here, 235. I need to just get rid of this. It already broke this trend. Sad, wah, wah. Already broke the trend, but it is trending up. AMD, NVIDIA. Man, AMD looks really good. Also, NVIDIA, I got to change this up because NVIDIA is setting up again. I'm tempted to look at calls, NVIDIA calls, if it just keeps forming this strong pattern. I don't know. But yeah, what do you say? So Palantir support spike with dodgeball. Palantir support is 14, but should have good earnings. Maybe I heard it wrong. I really hope they sell off after earnings, so I get another chance, because I'm underweight Palantir, and that was at one point my biggest position. So whatever. But yeah, support 14. Yeah, big support at 14 for Palantir. Maybe they sell off into 16. I think it'd be fair enough if they come back into 16, 17. Let me see. They're pulling back at the time. This thing is just a monster. Who knows? Maybe it never comes back. Eventually in the future, it'll present more opportunity. Did grapes really raise their rates? Grapes? Did grapes really raise their rates? I don't know what you mean by that, Slime Z. Palantir has to have good, but you know how that goes. Yeah, price is up a lot, but I don't know, man. The AI narrative might be so strong, it could just keep going up after earnings. You never know. So these earnings are what, August 7th? We're looking at 3 days from now. So next week is earnings. Nice. All right, so let's take a look at next week, right? We're sort of done with this week. ADP payrolls came in even. The market is strong. Let's take a look at what macro we're going to see for the next week. This weekend, man, Europe is in a recession still. This weekend we have, also Europe is tightening. They're slowing down a little bit. I wouldn't doubt if their inflation goes negative, you start seeing Europe start printing money. So anyways, this weekend we got some Japan stuff. Not very important. Monday, and that's only because they're a day ahead of us, so it's really their Monday. Anyways, next week we have, yeah, let's go to next week. What are our date? And this is tradingeconomics.com. Next week, what do we got next week? Big week. We have, for the US, nothing really on Monday. Nothing important on Monday. Used car prices at the end of the day. What is that going to signal? Well, if used car prices come in more negative, it just means more deflation, and that's going to I don't think that's going to change. Used car prices are coming down. And when I say prices, I'm talking about the rate of change of prices coming down, okay? Not that your prices are literally falling. Some cars they are probably. NFIB business optimism, we'll see how good business optimism is. It's starting to increase. Total household debt, interesting. I've never actually looked at this chart. And it's funny because people get mad at debt. This is what's so funny. People get mad at debt. They're like, why does this chart look like this? They're like, oh my, why are you so bullish on the market? Household debt's at record high, credit card debt record high. Bro, look at the trend. Every debt is always going higher. Debt is always going higher. So that's literally the economy we live in, the financial system where you borrow debt and prices go higher and debt goes higher. So that doesn't really change. It's not about it's the service payments that matter the most. Anyways, so we got business optimism. We got the Chinese inflation rate, which has been pretty much negative. We have Indian money supply. I think that's going higher. Dang, we don't really have a whole lot of data next week. This looks like we're gonna get some real technicals in the market. Without data, you have more technicals. Oh shoot, I'm tripping. We have core inflation next week. Oh my goodness, I missed that. Or inflation rate. So that is, we get the inflation rate August 10th. Now this is going to be interesting. This is what we need to focus on. So first, let's go to year on year. What is the market expecting? Oh, good. Thank goodness. This is so positive. This is so positive. Okay, the market is actually pricing in. Here we go down here. The market is pricing in. Remember, we're at 3%. Okay, we're at 3%. Here's the July reading that reflects the June reading. The market is expecting 3.3, so 3.1 to 3.3%, which means they do expect a bump up because of oil prices, right? If we come in at 2.9, explosive. Expect the market to go lower because it's now saying, okay, all the other inflation is falling fast enough that even oil prices going up doesn't matter. This would also be the first upside move in inflation versus the previous month that we've seen, but the base effects are in. So it's gonna be harder to fall lower from here. The base effects are in. All right. Core, month on month. Hold on, let's look at month on month. Expected to be 0.2. That'll probably be more important than month on month reading. Core inflation year on year is expected to come in at 4.8 across the board. 4.8 across the board. So that's an easy one. We come in higher. Market doesn't like it, comes in lower, market loves it pretty much. And then we have so many inflation readings that you got to you got to measure all the variables, not just one. It's not, oh, if core goes higher, we're going lower. It's everything together. Where do we lead, or where do we lean towards? What are we leaning more towards? Deflation, disinflation, or inflation? Core month on month, that's going to be a big one. But yeah, this core year on year is going to be big. I think this is the most important one, core, because we expect the headline to go up because of energy prices, which doesn't really give us a good economic. Well, it is economically important, but the core is what we're focused on. So 4.8%. Let's see if we can drop that. I think we can. I think we can, because you're not taking in food or energy, right? So that's the big one. Next Thursday. In between that, you're going to get a lot of technicals. I think the market's, I don't know. I actually don't know. We'll see how earnings end up. Then we got PPI Friday. Big PPI on Friday. That's a big one. And that's it. Thursday, Friday are the big days. There's not much data in between that, to be honest with you. So expect the market to really trade off technicals and earnings. What do we got? Earnings impact high dates next week. We already finished with Apple. They beat Berkshire Hathaway. Okay. Eli Lilly, UPS. Anything very important here? Not really. Dang, you don't really have a whole lot of earnings either. So is all next week. It is Thursday and Friday. Technicals Monday, Tuesday, and Wednesday. I bet we sell off into Wednesday evening because we're going to sell off before the market. Or if the market heads up, I bet you somebody had leaked the data. Somebody's probably going to have, it's probably going to be a reflection of a leaked data from Nick Timros on Twitter. He did it last time. Well, it's mostly speculation, but People say he leaked some of the data because he does the Fed's reports. Anyways, did the price of grapes fall? Is that what you're saying? The price of grapes or rise? I really don't know. I really don't know about grapes. But yeah, that's what we're looking at. Inflation next week. Market internals, I don't know. We know the service economy is up. We know GDP is up. We know that the long-term yields are rising. Here's the good news. Let's go to the macro. Okay, this is the easy take apart everything. Here's what we know. The dollar, oh, well, it's not falling yet, but the dollar's pulling back, thank goodness, finally. The issue is this will push up oil prices. Now I'm becoming a little more optimistic that the market's already pricing in higher inflation, okay, month on month. And oil is pushing, damn, oil's pushing to 83.50. Oil's pushing. Of course, if it gets too elevated, then that's going to be bad. But the market is still bidding up in the face of this, okay? The dollar coming down is a really good thing. I think this is helping oil prices also. So very optimistic. Also, yields coming down a little bit. So their yields are not reacting to the oil spike, which is very surprising to me so far, right? Not reacting to the oil spike. Maybe yields are really just focused on core. Maybe so. Or maybe we're getting tricked out here. Triple B spreads bouncing a little bit. That's a little bit of risk for the equity market. It's bouncing a little bit. Bond volatility up a little. Oh, bond volatility is turning up. Okay, not great. All right, well, that's the what is this? That's the show. I appreciate you guys joining. Stay blessed. Have a great weekend. Remember, I am going out of town, so I won't be here tomorrow live, but I will send out a report. If you are connected to the newsletter, it's free. Check it out. Link in the description. Stay up to date. Follow me on Twitter. Subscribe to the YouTube if you can. Help me out with the algorithm. I'll be sending out videos still, and next week my streams I'll still be streaming. They'll just look different. They won't look as good because I'm going to be out of town. I won't have all my equipment, but I'll still give you the update on what's happening in the market. All right. I appreciate you guys. Get your exercise, go for a walk, hit the bike, get some sunlight in the morning, lift some weights, do some mobility, get your stretching in, feel alive, get a great diet. Don't drink too much this weekend or not at all. Stay healthy, guys, right? Try to do your best you possibly can. Aim high, focus on the day. If you lost money, if something bad happened, you can always do better the next day. But don't give up. Keep going hard. You guys stay blessed. I appreciate you. Check you later. Stay blessed. Stay blessed. You're still above ground. Let's go. All right, guys.